Let's get across the market moves now. Peter Maguire joining us from Train.com. Pete, happy Monday to you, and big week ahead. I feel as though we say that every week. Nonetheless, it is big, certainly data-wise. Let's start, though, with what we saw on Friday. That non-farm payrolls report, certainly somewhat weaker than expected.
Absolutely, Andrew. And down 23,000. Also, May and June were revised lower by about 103,000. So that was a real wake-up call as far as the fabric of employment across the states. A lot of government jobs laid out. It's going to be, again, fascinating where the Fed sees this. You've got Jackson Hole next month. All of those, you've got a strong earnings profile. Equities are at all-time highs in US, or, just nudging it. And again, oil prices continue to have a leg up. It's very dynamic, this market, and I think there's a lot of moving parts, and this week will tell the story naturally with the inflation numbers and how the Fed is tipped to proceed.
Yeah, interesting, as you mentioned, do get CPI this week. Pete, post that jobs report, market's pricing at about a 40% chance the Fed is going to move higher in September. So clearly perhaps the pressure coming off, but it may well be contingent on that inflation report.
Yeah, absolutely, Andrew. That was running at about 65% before that number dropped, and it really pulled back dramatically. As you said, just about 40%. It's you've got about an 85% probability of a rate hike in October if September doesn't materialise. So that's something to keep on I suppose, on our radar. Then you've got the midterms just in early November. So again, how does that all gel and look like? And from an inflation standpoint, forecasts for core CPI, around that 2.5%, down from 2.6% in June. That's the forecast. So we're keeping an eye on all the big numbers, how they drop, and naturally the impact to US dollar, bond yields, and of course currency.
We'll get to currency in just a moment, Pete, though. Central bank moves. Obviously, the key one for us is the RBA meeting tomorrow.
Yeah.
And, let's take a look at the big four economists there from the bank saying look, we're at peak rates. So it is going to be interesting, that commentary we're going to hear from Michelle Bullock as to what comes next.
Exactly what the governor says, and whether there is one more by end of year. I mean, the jury's out. I take on board what the big four economists say, and they're at the peak point. But if inflation was to stay at this sticky number, that's much concern from the RBA governor's standpoint. So again, she'll take a lead from naturally what's happening across Asia, consumption, employment numbers here, how the housing market is moving and gyrating to all the news and views, and then what it looks like probably later in the year or early 27. I'm erring on the side there'll be no move, so let's just see the commentary, see how the markets react, and maybe the Aussie might take a little bit of a tumble. You never know. It's sitting at around about 70, 66, so it's again going to be volatile on that news coming out.
Pete, just taking a look at what the latest developments out of the Middle East, Iran and Oman trying to come up with a deal to reopen the Strait of Hormuz, the US looking at that and the implications for it. We did also see oil actually move a little higher. What you're noticing in the oil market at the moment?
Well, it's at 78, 85 sort of number for Brent, Andrew. You've got an 80, 84, 40 sort of number for WTI. They've certainly edged up considerably from those lows earlier last week. So that's a concern. As you mentioned, Iran and Oman, as far as the gateway into Hormuz and the exit out of there, and if there's going to be any form of tariff or costing to travel through the strait. Again, a lot of uncertainty. President Trump, if you listen to his dialogue and the American, as far as the viewpoints from Rubio down and Scott Bessent, it seems to be they've got a different viewpoint or a different as far as market interpretation than possibly what Iran has. And again, this is causing a deal of conflict or trying to identify a trend from a trading perspective. And so that downdraft has come, and it's really, it's non-existent anymore. The market's moving up. Gold was up 1%, or pardon me, $100. sitting at around about 4,400 a troy ounce. So that's had a nice run up, and so has silver as well. So yeah, it's quite dynamic, the commodity markets at the moment.
Indeed. As are currencies, Pete, so we did see the US dollar pull back. Look, clearly that pairing between the dollar and the yen critical at the moment, given the intervention we're seeing.
Yeah. Scott Bessent, and he bought that in euros last week through, and that was Treasury, to assist the situation as far as Japan. Whether we're going to see that 155 handle again anytime soon, you're sitting at 157.75 sort of number for the yen versus US dollar. It's delicate. What's the framework as far as a Bank of Japan initiative to raise rates? The jury's still out. You might see another rate rise by end of year. I think possibly Q4. Let's just see how it rolls. You've got a red hot stock market. The Nikkei 225's at nearly record territory. It's performed incredibly well, up 70 or 80%. Can you believe it, for the year? So again, there's a lot of moving parts to this, and we've got to get through the next month or two and look at Jackson Hole, how that's interpreted, and then the Japanese yen. Naturally, do you see more intervention if it was to edge up higher or lower at that 163 sort of handle?
I gather we're actually getting some explanation from the Bank of Japan today in terms of decision making.
Yeah, I'm sitting on the sidelines there. I don't think you're going to see a lot of, any movement, but I'm interested in the commentary, the BOJ officials, and naturally the market sentiment, how it reads the play, what happens to the Nikkei. I'm looking for movement across the Japanese market today. I think it could be relatively positive. So again, it's a wonderful market to be a part of, and so is South Korea. They're very volatile and they offer big swings.
That's something of an understatement, given what we've seen, Pete. It's quite incredible, those moves.
It is unbelievable.
UK, what are you noticing there just in terms of GDP overall, the economy, what the Bank of England is likely to do next?
Well, I think it's a tough one. I mean, you've got to get through summer period, and the overall, I think, condition of the market, it's relatively weak. There's every chance you could see some sort of move by the Bank of England over the next couple of months as far as rate hike. We've just got to sit through that and again see unemployment numbers, how CPI is looking. It's delicate. You're worrying about, naturally, from an energy perspective, if the market was to be softer than what it is at the moment, then that's going to be a good sign, and that'd change sentiment as far as the Bank of England, with, you would think, lower inflation. So it's delicate, and it's very much a week by week proposition. I'm looking at the market, the pound still up that 135 sort of number. And let's just see what happens by the Bank of England over the next matter of months.
And Pete, you mentioned that the gold was on the move. Bitcoin, though, it's trading in a range at the moment.
Yeah, very much so, Andrew. That 64 handle sort of US dollar market, 64,000, and up to 65. It seems to oscillate. There's plenty of volatility and plenty of movement there, but no trend to jump out of this. Let's see what happens as far as gold over the next, and Fed policy, how that drives again movement across the precious metals, and that may take Bitcoin up for another run. XRP's been crushed at $1.04 US. So it's tough at the moment. They're not markets to look at capital growth. They're volatile if you want to trade them, and there's never short of surprises. So just hold on and hang on to your hat, and right, it's like a wild bronco, that one.